Imagine this. You wake up one morning in your cozy suburban home, the one you've poured your life savings into, only to discover that the real owner isn't you, it's a colossal corporation lurking in the shadows of Wall Street, pulling strings on everything from your mortgage rate to the very future of your children's opportunities. That corporation is BlackRock, the trillion-dollar behemoth that's quietly amassed more power than most nations. And right now, as we speak, on this crisp December day in 2025, they're positioning themselves to own not just homes, but the entire fabric of our lives. Silver prices might be spiking and banks hoarding metals, but that's child's play compared to this. BlackRock's grip on real estate, policy and global economies is tightening like a noose. And if you're in the US or UK, your dream of home ownership could be slipping away faster than you think. But hold on, because what I'm about to reveal isn't some wild conspiracy spun from thin air. It's a meticulously built empire, brick by financial brick. And today we're peeling back the layers to expose how this shadow giant is plotting to reshape your world. Before we dive deeper, let me be crystal clear. This isn't financial advice, and I'm not affiliated with BlackRock or any entity mentioned here. I'm just an analyst who spent countless hours poring over reports, data and patterns that point to something profoundly unsettling. This is educational, drawn from publicly available information, market analyses, and historical trends that anyone can verify. Now picture BlackRock not as a mere asset manager, but as the architect of a new world order, starting from its humble beginnings in 1988 when Larry Fink and a handful of Wall Street visionaries founded it as a risk management firm under the Blackstone umbrella. Fast forward to today, December 10th, 2025, and BlackRock's assets under management have ballooned to a staggering $13.46 trillion as of the third quarter, up 17% from last year, dwarfing the economies of entire countries like Spain or Australia. They've achieved this through relentless expansion, acquiring rivals like Barclays Global Investors in 2009 for their iShares, ETF powerhouse, which now commands over 40% of the global ETF market, and more recently swallowing up HPS Investment Partners for $12 billion, adding another $165 billion in assets overnight. But it's not just size that makes BlackRock terrifying, it's their insidious influence, woven into the very threads of daily life, from the stocks in your pension to the policies shaping your neighborhood. Let's break this down into a pattern I've observed across decades of financial history, a four-stage cycle that empires like BlackRock follow to consolidate power, and right now, we're witnessing the culmination in real time. Stage 1, the infiltration. It begins with quiet accumulation, where the entity embeds itself into the system under the guise of stability and innovation. For BlackRock, this kicked off post-2008 financial crisis, when the world was reeling from mortgage meltdowns and bank bailouts. Larry Fink, with his knack for crisis navigation, positioned BlackRock as the Federal Reserve's go-to advisor, helping to manage toxic assets and restructure the housing market. They didn't just advise, they profited immensely, their assets surging from $1.3 trillion in 2008 to over $4 trillion by 2014. During this phase, BlackRock started dipping into real estate, not by directly snapping up single-family homes, as some viral myths suggest, but through sophisticated channels like providing capital for mortgages and investing in real estate, investment trusts, REITs, and multifamily properties. Reports from 2025 show BlackRock's real estate arm managing billions in assets across North America, Europe, and Asia Pacific, with over 210 professionals in 16 offices, orchestrating deals that influence housing, supply and prices indirectly. Think about it. While you're struggling with soaring rents in London or skyrocketing property taxes in Texas, BlackRock's funds are fueling the lenders and developers who set those terms, creating an illusion of market-driven stability while they flood the system with capital that suppresses competition and inflates values. As we transition into stage 2, the expansion, the gap widens between perception and reality, where the empire stacks influence upon influence, leveraging technology and relationships to dominate. BlackRock's secret weapon here is Aladdin, their proprietary risk management platform. That's not just a tool, but a digital overlord, monitoring over $20 trillion in assets worldwide and used by governments, central banks, and competitors alike. By 2025, Aladdin has evolved with AI integrations, predicting market shifts and advising on everything from interest rates to infrastructure investments. This expansion phase saw BlackRock's foray deeper into private markets, with their 2025 outlook predicting a surge to $20 trillion in alternatives like private debt, equity, and real estate. In the housing sector, while BlackRock publicly denies buying single-family homes, and indeed, they're not the primary culprits like some memes claim, their investments in firms like Invitation Homes, where they hold a 10.2% stake, tell a different story. Invitation Homes controls over 84,000 rental properties across the US, focusing on single-family rentals that have driven up rents by 10–20% in key markets post-acquisition. Industry data from 2025 reveals institutional investors, backed by BlackRock's capital, own about 5% of US single-family rentals, but in hotspots like Atlanta or Phoenix, that figure spikes to 25%, creating artificial scarcity. Meanwhile, in the UK, BlackRock's European real estate funds have poured billions into London and Manchester developments, contributing to a 14% year-over-year rise in transaction volumes despite economic headwinds. This isn't accidental. It's engineered growth, where BlackRock's $225 billion in US public energy companies and $11 trillion total influence allows them to sway policies on zoning, subsidies, and even immigration, factors that indirectly inflate housing demand while suppressing supply for average buyers. Now, here's where it gets nerve-wracking. We're entering stage 3, the consolidation, where cracks appear, and the empire asserts dominance amid chaos. In 2025, as global markets rally and the Fed hints at rate cuts with an 87.2% probability at their December meeting, BlackRock's assets hit record highs, but underlying tensions simmer. Larry Fink himself warned in April that the US is very close to a recession, predicting stocks could fall another 20% amid tariffs and uncertainty, yet his firm thrives on volatility, raking in $205 billion in Q3 inflows alone. The housing market exemplifies this. While official reports claim BlackRock isn't hoarding homes, their ecosystem does through REITs, mortgage-backed securities, and partnerships that enable institutional buyers to outbid families. A 2025 FTC settlement slapped Invitation. Homes with $48 million for junk fees and deceptive practices, like $50 application fees and $15 monthly utility add-ons that bloated bills by $1,700 annually, yet BlackRock's stake remains untouched. In the UK, similar patterns emerge, with BlackRock-backed funds acquiring multifamily blocks in cities like Birmingham, where rents have surged 30% since 2021 amid supply deficits. This consolidation isn't just financial, it's political. BlackRock's lobbyists have donated over $799,000 to figures like US senators, ensuring favorable regulations, while Fink's seat on the World Economic Forum board pushes stakeholder capitalism, blending corporate power with government policy. Historical echoes abound, just as JP Morgan flipped from short to long on silver in 2011, amassing 675 million ounces. BlackRock has pivoted from crisis advisor to policy shaper, advising the Fed on bond purchases during COVID that ballooned their assets by trillions, all while everyday homeowners faced 60% premiums on physical assets like lumber or land. And finally, stage 4, the domination, where the empire erupts into full control, crushing opposition and reaping the rewards. We're teetering on this edge now, with BlackRock's influence manifesting in ways that directly threaten your home and future. Consider the numbers. By mid-2025, US home prices have lost value in 53% of markets, the worst since 2012 per Zillow, yet institutional money keeps premiums elevated, with delays in physical deliveries and 30–50% overspot costs in crisis scenarios. BlackRock's ESG push, though dialed back amid 2025 backlash from Republican states leading to antitrust suits, still forces companies to prioritize sustainability over affordability, like suppressing coal while investing in green tech that hikes energy bills for homeowners. Fink's 2025 letter to CEOs omitted climate and DEI entirely, shifting to AI and nuclear power, signaling a strategic retreat to maintain power, yet their $11 trillion footprint means they can dictate terms. In real estate, the plot thickens. While BlackRock claims to enable home ownership through mortgage capital, critics point to their role in tokenization, where Fink predicts stocks, bonds, and homes will be digitized on blockchains, allowing programmable control over assets. Imagine your home's title tokenized, subject to ESG compliance or geo-fenced restrictions. This isn't sci-fi. It's Fink's vision from April 2025 interviews. Geopolitically, BlackRock's ties to defense giants like Lockheed, with shares in weapons, fueling conflicts, and their advisory role, too. Central banks mean they profit from instability, much like the Hunt brothers' silver squeeze in 1980, but with institutional backing that regulators can't touch. In the UK, their infrastructure funds eye 5G and data centers, tying housing to tech surveillance, while in the US, pension funds funneled through BlackRock risk a pension apocalypse if markets correct. But let's zoom in on the human cost, the emotional core of this shadow empire's plot. Families evicted during COVID while BlackRock-backed firms charged 60% premiums, young couples in Manchester or Miami priced out as rents hit 30%, annualized lease rates, and retirees watching their savings erode as Fink bets big on AI winners that could displace millions of jobs. Reports from 2025 show BlackRock's wealth management driving private markets to $20 trillion by 2030. But at what price? Sovereign wealth funds and pensions scramble for physical assets, yet BlackRock's positioning more than Berkshire Hathaway or entire nations means they win big when others falter. Historical parallels scream warnings. The 2008 mortgage crisis taught us paper promises fail, sending gold up 167%. But BlackRock didn't fix it. They amplified it, printing trillions and suppressing rates to zero, expanding paper markets further. Now, with gold at 4,212 and silver erupting to 59 highs, the signal is clear. Scarcity matters, and BlackRock's undervaluation of real assets like homes could correct violently, potentially surging prices to inflation-adjusted highs akin to silver's 170 equivalent from 1980. As we approach the climax, consider the accelerants. The Fed's December 9-10 meeting could weaken the dollar, surging hard assets like real estate, while BlackRock's AI-driven Aladdin acts as the spark, predicting and profiting from the chaos. Geopolitical tensions, from China's semiconductor strategies to US tariffs, funnel money to BlackRock's alternatives. And their $225 billion in energy bets position them perfectly for the energy surge. This isn't about silver or stocks, it's about control. With BlackRock as the symptom of a fiat dollar unbacked since 1971, masking inflation through CPI tweaks, their empire coils for 45 years, much like silver's suppression. And now it's erupting. Homes still available, but premiums rising. Delays mounting. And when registered inventories drain, think CumEx for metals. But for land titles, the stress could explode premiums to 50% or more. In the end, this shadow empire isn't inevitable. It's a convergence of unchecked power, but history repeats only if we let it. The Hunt brothers were crushed for being reckless, but BlackRock learned, patient, systemic, backed by the rules they help write. Signals abound, record AUM, structural housing deficits, political ties all aligning. You don't have to take my word. Study the patterns, question the narratives. The choice is yours. Position yourself with awareness, or look back in 6 months wishing you'd seen it coming. If this resonates, hit subscribe for real-time updates as this unfolds. Do you think BlackRock's grip will tighten to $20 trillion by 2026. Share your thoughts below. The conversation starts now. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way, so stay curious, and I'll see you again soon, right here on The Scope.